Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Trident Limited. Can you invest in this company or what you should avoid? So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Trident, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you can ask me questions on a daily basis. Plus, you'll have access to my portfolio, a watch list of 70 stocks in which I have the buying ranges, plus short-term picks that I keep on putting as podcast, plus other podcasts that I put up every week. So every week I put up 2 to 3 podcasts at least. For detailed market or company talk or one-on-one discussion you require, you can directly email me and we can work things out. Now about the company, Trident was established in 1990 and they manufacture home textile yarns and paper plus paper chemicals. They have leadership in home textile, exposed to all across the globe, and have customers in multiple industries. So the kind of products or textile materials that they are sending is used in a number of industries in a number of ways, not just clothing for you can say individuals, but in other sectors as well. It is spread across India. If you look at the numbers for September FY21 numbers, so this is just the Q2 numbers compared to last year. There has been a drop in sales of around 11%. The profit quite obviously dropped by around 25%, as has been happening with other manufacturing companies also. They are trying to get back to normalcy, but still not there, especially companies in the textile division. Debt has reduced, which is a positive. Market cap of the company is around 4,000 crores. There's a healthy dividend payout that the company has done so far, but the return on equity or operating profit margin is in low double digits, which is not magnificent, to tell you frankly. So, what has been the problems of the textile sector? And this has been plagued by the textile sector thoroughly has been plagued by these, and due to which even Tridents and the likes, companies of the likes, have not performed that well. Erratic power supply is a major reason. So, although power has reached to many parts of India, yet you would understand that power supply is not 24 hours a day as it is in many developed nations. So, erratic supply of power hinders the kind of productivity that these companies would be having. Machinery has become totally obsolete. So, what has happened is there needs to be more capex and investments into better machinery that has to be bought. But then if the companies are not making very good profits, they cannot get into, you can say, buying into more products of such kind, or inventories, or kind of products, you can say machineries, which would increase the productivity. For this to happen, the supply side constraints has to go away, the demand side constraints has to go away, and there should be more demand. As demand is less, so the companies are not investing into better machinery because they understand that they don't have to manufacture at 70-80% capacity. High debt is another reason, that due to the debt taken up, because this is a business in which you would understand that you need high gestation period, you need high capex, and for that you need a lot of money, and due to which companies raise debt in this industry. So the debt remains high, and plus if there is less amount of business that has been taking place for the last 2 3 years with the global slowdown, it is a spiral in which these companies have fallen into, and the debt keeps ballooning because you don't have the profits to meet the debts, and so on and so forth. Low capacity utilization, as I mentioned, unless when the company have taken up debt, when the companies have to repay debt, so that they have to make, so in that regard they would have to make more profits in order to repay debt. But when capacity utilization is less, there is a high amount of fixed cost. You can understand that the fixed cost ratios goes up. So when that happens, it will increase the debt further, it will increase the expenses further, and the profitability will get hindered. So highly capital intensive business. These are the major reasons why I stay away from such businesses, because you never know when it's going to turn around. Yes, whenever the turnaround will take place, the stocks may go up 5 6 8 times, but we don't know when that will happen. For the last 6 7 years, this industry has been plagued by these problems, and people who are invested into such companies are waiting for their money to probably come back, or their stock prices to come back, let alone making profits. Whereas yes, other companies in the consumer domain do well from time to time. Yes, an HUL, a Britannia, and such companies, a Nestle might not have done well over the last 2 3 months, but these are consistent compounders over 1 year, 2 years, and probably these are the companies to look at, as we retail investors are not able to understand the cycles in all these. This is like a commodity cycle, so whenever the textile industry comes back big time, only then these stocks will perform, and we don't know when that will happen. And there is more certainty while buying into products which are more consumer oriented as to how the numbers would pan out. In the cotton industry per se, the problems are shortage of raw materials. So raw material that is sourced from abroad is getting there is a shortage for that, and hence you have raw material cost that keeps rising. Now labor cost has increased, so with the expenses increasing here in India, and you would understand that CPI or consumer price index has taken a turn for the worse. There is inflation, and we see that inflation take shape when we buy food products. So I look at inflation on two parameters: how are the food products being priced at the moment, and is there a complete increase in staple food products like breads, biscuits, you can say, flour, rice, to an extent butter, ghee, etc., whatever that is used to make food. So if those food product prices keep rising, and it does over a period of time, then there is problem with respect to companies which are in the manufacturing sector, because they have to increase salaries of labor class, because labor will not work. So what is happening is productivity of labor goes down, you have to pay more to them. Plus there is competition from other Asian countries. So we have competition from Bangladesh, we have competition from Vietnam, from to an extent other East Asian countries like Laos, Indonesia. And one needs to understand that Bangladesh has virtually taken over this textile market by storm over the last 5 years, and India have lagged behind. So all these things, like we talk about the manufacturing sector in the electronics domain or electronic manufacturing, and we are seeing manufacturing coming to India. We are seeing products manufacturing and sourcing coming to India in pharmaceutical, in IT. In textile, it is a complete opposite, that it has gone to other East Asian countries and to our neighbor Bangladesh. So that is also a great concern for the company. High excise and import duty is another reason why companies in this sector struggle. So you understand this, that so many so many expenses, large expenses are there for the textile companies, and that's why unless there is a complete boom in the textile industry and the company is making a lot of sales, they cannot make very good profits. And when there is no greater profits, then you don't have an EPS, and then nobody looks at such shares, so no large players. So you have to take that everything into consideration while investing into such an industry. So what needs to be done? In my opinion, wait for the turnaround, and if you have it, and even if you're making losses of 15-20%, it's better to get out and make money somewhere else. You'll be able to make up these 20% losses if you're having that. Be very cautious in this sector, and especially in this market where everything is surging. You would think, and it would look optically that this sector will also do really well. It is coming at a very low PE of 4 5. This will go up, and this will double, that will double. It will be very difficult for this to happen. I think better companies will always prevail. So this was my video on Trident. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.